In these uncertain economic times, it's easy to be worried about protecting your wealth, your hard-earned savings, and your family's financial future. Plunging interest rates, the devaluating dollar, and political unrest constantly threaten what you have worked hard to earn and all that you own. That's why now it's more important than ever to protect your assets and have the money you need to make your dreams come true. Welcome to the Global Wealth Fortress Report with successful global entrepreneur and wealth preservation expert Joel Nagel. Joel's helped thousands of people just like you protect what you have so that you can make even more and make your every dream come true. So, sit back and enjoy Joel Nagel's offshore expert advice on how you can live the good life at a great price, where the sun never sets on your financial fortress.
Hello, and welcome to Joel Nagel's Global Wealth Fortress Report. A special edition today because Joel, the America's #1 asset protection attorney, we're going to talk about cryptocurrency because it's more and more in the news. There's an article that I asked Joel about in the Washington Times that kind of says the turn toward crypto is going to accelerate. So, Joel, what's the lowdown here? What do you think?
Well, hello, Carter, and it's good to be with you again for our weekly show. There's a lot going on in the world. Every week it seems like it's tough to try to pick out the one thing or two things to talk about because there's just so many things going on. And I'm in Vienna, Austria right now at my home here in Europe, and of course, the Ukraine war is still really dominating the news, and that's what everyone's talking about. We're seeing the impact here in Europe quite a bit. I'm sure you can see it and feel it in the U.S. too in different ways, but here it's profound. I mean, it's already having impact on the food supply chains. It's causing fuel prices to skyrocket here. The Germanic countries have been very, very conservative with their monetary policy, not like the U.S. has been, but even still, they're seeing inflation. They're seeing the euro is going down against the dollar as more and more people scramble in the short run to try to get their hands on dollars. So, actually, I was just looking before we started the show today. I was looking at a lot of price charts for virtually everything since the Ukraine invasion back in March. And it really almost doesn't matter whether you're talking about stocks and bonds and mutual funds and gold, crypto. Like, for the most part, everything's down. I think when I checked, everything was down between around 10 and 30%. That's sort of the range, and crypto's actually been at the higher end of that range. And since the first of the year, Bitcoin's down. It's down roughly $20,000. So it's down about 40%. So it's definitely at the higher end of that range. But what we've seen, and I think we've talked about that before on the show, what we've seen is that certain things are finite and certain things are infinite. And crypto, particularly Bitcoin, is in the category of things that are finite. There's a specific number of Bitcoin. It takes time and energy to mine new Bitcoin. There's a very limited supply of new Bitcoin, and that new supply will actually run out when the final Bitcoin is mined. So I think, when we talk about crypto in the long run, we're going to see that regardless of what happens with war, devaluation, inflation, when you're comparing a fiat currency like the dollar that gets printed over and over and over, in fact, there doesn't even seem to be any controls anymore on, the M1, the M2 monetary supply. So, the Fed basically solves all of its problems by printing. And I also just read today that the total amount of debt and derivatives derivative debt in dollars is about 300 trillion. So that's just an incomprehensible number.
Yeah.
We hear about
Yeah.
debt numbers far lower than that, but those are specific kinds of debt. It's government debt, it's household debt, it's public sector debt, private sector debt. But when you add up all the debt in dollars, it's about 300 trillion. And the question is, who wants to keep buying, and how can the government keep rolling over this debt? And we're already seeing that the Fed has had to raise interest rates, but they're still very artificially low compared to where they'd really have to be market type conditions. In other words, keeping interest rates artificially low, even though they're going up. But as they go up, they are pulling investment from other parts of the world that have worse currencies, quite frankly. I mean, even here in Europe, I mean, the euro is a world reserve currency, but there's a lot of fear here in Europe, and with the war right next door. I was speaking to some Austrian friends yesterday, and they were telling me that the western border of Ukraine is closer to Vienna than the western border of Austria. So,
Wow.
Vienna sits, and people think of Austria as Western Europe. It's really not. It's Central Europe bordering on Eastern Europe. The country runs east to west, and the capital, Vienna, sits in the extreme eastern part. I think it's about 25 or 30 miles from Vienna to cross the border into Slovakia. So, we have the capital of Slovakia is Bratislava, and that's, really, I could jump in my car and be there in, 30 minutes. That's how close. So, Western Ukraine, where this war is happening, it's not some faraway place on the other side of the world. It's right here. It's having impact here, which is impacting the euro vis-a-vis dollar, giving the dollar some official oomph. But, I think in the long run, we'll see the things that are finite, whether it's Bitcoin, whether it's gold, whether it's real estate. You notice I always like to come back to those types of asset classes. I think those ones are really going to do much better than fiat currency if we project 3 years, 5 years, 10 years down the road.
Yeah, I think it's a great analysis. And I think, you mentioned the impact of the Ukraine situation on Europe. And I think what Americans need to realize, it has not impacted here yet. Biden keeps saying it's Putin's inflation. It has nothing. Look, all the inflation we have right now, I just drove by Rutter's yesterday. You know Rutter's because you're from Pennsylvania. Gas station, right? Yesterday, premium was $5.15 a gallon. Today, it's $5.30 a gallon. Well, that has nothing to do with Putin. We're going to get hit by the Putin inflation eventually, and we're going to get hit in food prices, everything you just talked about. But we have a serious mess on our hands that, Joe, I think it's going to get worse. What do you think?
Yeah, exactly. I mean, you hear these official statistics. They're saying that inflation's running about 8%, but you just gave an analysis of a 3% inflation in a day. So the notion that we have 8% annual inflation is ridiculous. And of course, anybody that goes to the grocery store knows that those numbers are dramatically underreported, misreported. The things that even go into the survey keep changing because they really don't want things like food and energy costs to be part of the analysis of what constitutes inflation. I think we're going to see much worse problems ahead. I think the U.S. is going to get it easy because of we're a first world superpower. We have a very large economy, and if your gasoline went up 3%, I'm guessing you still bought it because you need it to move around. But there are other parts of the world, particularly when you go to the less affluent parts of the world in Latin America and Africa, Southeast Asia, where all of a sudden the prices get to the point where people just can't afford to buy it. I read an article here in the Austrian paper that they're projecting terrible famines in Africa, as early as this fall, because the primary grain supply in many parts of Africa comes from, guess where? The Ukraine.
That's
So,
That's
all of
it.
a sudden, if for you or me, the price of bread goes up 10 cents, we're just going to pay it, or 50 cents or a dollar, whatever it is, we're going to pay it and keep on going. But if all of a sudden, your wages won't allow you to even buy bread, in a country in Africa, then there's going to be huge social unrest and problems. And I think that circles back to cryptocurrency. I mean,
Absolutely.
we have inept politicians that have inept monetary policy, and it's causing these economic problems. Whereas with Bitcoin and with other stable type cryptocurrencies, you have a purchasing power. It does move around based on supply and demand, but it's real and it's not issued by government. It's not a debt instrument. It's actually equity. The more of it you save, the more wealth you have. And I don't know that that's going to be the case, for very much longer with dollars. I mean, you may accumulate more dollars, but over time, the value of the dollar is becoming worth less and less and less. So, you have to work harder. You have to save more. You have to invest better, just to stay put. You can't. You're not getting ahead. And I think most Americans see that and feel that. And I think that's gonna. I don't know that the Republicans necessarily have a better plan, but I think most people think that the direction we're going clearly is not working, and there doesn't really seem to be a plan. I mean, everybody's calling everybody names, but blaming it on Putin, or blaming it on what was the one thing, temporary supply chain disruption. I mean, no, it's real inflation, it's real devaluation that's happening right before our eyes.
Well, that's it precisely. And Joel, let me ask you this: so we have the Bitcoin, and we have some of these others that are algorithm-based cryptocurrencies. Are you getting many questions from your clients now about the emerging commodity-based cryptocurrencies? I got to tell you, I know two individuals. One is a international infrastructure billionaire. The other is the former head of the economic division at the Chamber of Commerce, Dr. Ram, both of whom are developing commodity-based cryptocurrencies. What are you hearing on that? What is the direction that you're talking to your people about?
Yeah, that's a great question, Carter. And I can tell you that the vast majority of my clients are like the vast majority of Americans, where they're kind of new to the crypto scene. They're looking at it as something that, to dip their toe in, put their foot in, get some exposure to it as a diversification from their other assets. But, interestingly and fortunately, I've also had clients from the exact opposite end of the spectrum who are, hardcore crypto investors from day one. I mean, I have clients that were in Bitcoin literally in its first year of operations, when it traded for cents and then dollars. And, that's, they're in a completely different position, have a very different perspective. So, when it comes to, there's something like around 4,000 or more cryptocurrencies.
Right.
And, everybody's coming at it a different way. Some of them have very niche features to do very specific things. Some of them are designed to be more general. And, I can see, just like people are looking for something to replace the dollar as the world reserve currency, there are people looking to create, a better cryptocurrency. And, just because Bitcoin's been around the longest, doesn't necessarily mean it's the only, currency, the only cryptocurrency, or maybe even the best cryptocurrency going forward in the future. And I think that, we're going to see winners, we're going to see losers, we're going to see, we're still really at the very early stages of this industry. It really only started about 2010, and we're sitting here in 2022. So it's been around a dozen years, but it's like a snowball that's accelerating faster and faster and getting bigger and bigger. More and more people are starting to get exposure. They're starting to watch it. They're looking at it. The government's introducing more and more regulations. So it's maturing. It's advancing. And I do think that some of the new currencies that are coming out, to be able to compete in the marketplace, will have to be linked to something.
Yes.
So we've seen, for example, cryptocurrency that's tied to gold, for example. We've seen cryptocurrency that's tied to the US dollar, like USDC or UST.
Right.
And you might say, well, why would you want to have a cryptocurrency that's tied to the dollar? But again, there are reasons for that. If you're trying to do a dollar transaction, that you need to send $30,000 to Honduras to buy a piece of property, with USDC or UST, you can do that transaction for a few pennies, and it takes like 6 seconds. Or you can screw around, go drive to your bank and fill out paperwork for 2 hours, and pay a $50 or $100 wire fee. So there are efficiencies, even with cryptocurrencies that are dollar based. But I think that we will probably see more and more cryptocurrencies that are based on some kind of hard asset, or maybe even a basket of assets that include gold and silver and oil and things like that. And then you get into the question about, well, who's really issuing the token, who's really behind it. And in the last few days, when the crypto market have really gone down quite a bit, some of these currencies have gone into what are called death spirals, meaning everybody's trying to bail and there's nobody really there to buy it. Whereas a big one like Bitcoin, yeah, it goes up and down, but if everybody wants to sell, presumably it's got a broad enough base that there are enough people out there that also want to buy. So it's unlikely that Bitcoin's going to ever go to zero, or even back down to where it started at a few pennies. Right. But with some of these other ones, I think we will have ones that establish themselves in the marketplace, and I think they are the ones that you just referenced that have some kind of real physical backing to them. And then ones that do unique things that people want. I've talked to groups that are doing lifestyle tokens and real estate tokens, and all types of different ideas. And some of those ideas are going to win, some of them are going to lose. But I think the ones that are based on natural resources, if they have a real backing and it's a legitimate provider that really has the assets that they say they do, then those types of currencies I think will do very well.
All right, look, let me ask you. That's a great response. Let me ask you specifically. What would you say one of the cryptocurrencies of the people I know, Dr. Rand's cryptocurrency? All right, it's aluminum backed by aluminum. Okay. Now, what if you had a client come to you and say, Joel, what do you think about this? What is your process as really an asset protection expert? What is your process for evaluating something like that, so our viewers will know at least a little bit what to watch for?
Yeah, that's a really great question. And I think it's important that you do try to find the facts about whatever it is, whatever coin or token you're thinking about buying. It shouldn't just be, I got a hot tip at the golf club. I mean, that maybe that'll work and maybe it won't work. But if you go and if you have your account with, let's say, a big exchange like Coinbase, normally you can click on the specific coin or token, and you can get a lot of research data. Just like if if you have a brokerage account at Charles Schwab, you can do the same thing, looking at a stock or a bond. You can see how it's rated and what it's made up of, what its substance is. In the crypto space, traditionally, when somebody invents or comes up with a new coin or token, they issue something called a white paper. And a white paper is very much like a almost like a securities offering document where it's got all the good, the bad, and the ugly, and the timeline, and what the coin does. Now, in some cases, the coin, even after it's launched, can still be controlled by the inventor, meaning the inventor has all the supply. In some cases, the supply is limited, like Bitcoin. In some cases, it's unlimited. And so you have to look at that. I mean, if I have an unlimited supply of a cryptocurrency, I might shy away from it. If I have a limited supply, or I mean, if it's unlimited but it's backed by something tied, one coin equals 1 ounce of aluminum, but they can only issue as many coins as they have ounces of aluminum sitting in the bank vault in the back, then there doesn't have to be a specific number. But most of the better coins, again, like Bitcoin, they do have a maximum circulation. So I want to find a coin that does something unique, or is backed by some metals. In your case, aluminum. It should tend to trend in the same direction as aluminum itself. So if aluminum goes up, you would expect that the value of that coin to go up, and if aluminum goes down, it's going to go down. It's just the coin becomes an easier way to trade that commodity. And we're seeing other ones, coins that are backed by silver, coins backed by gold, right, coins backed by euro. You can, again, there's so many of them out there now. But I would encourage you to do your homework. Try to get the white paper. Most every company, if they're out there pushing their coin, either directly from the company or from the exchange, normally you can track down the white paper and read it, try to understand it. I am a fan of Warren Buffett, and his comment about it should be easy enough to really read and understand. And if it's not, if they're giving you a bunch of double talk and gobbledygook, I'm probably gonna shy away from it.
Very good. I mean, that's an excellent analysis. Well, that's exactly what we needed to hear. I think I guess the final question I would have is, as a percentage of investment, if I'm protecting my assets, at this point, what percentage are you suggesting is the max you would invest in a cryptocurrency at this point? Or do you have a max? I guess that's the best way to ask it.
Yeah, that's a tough question, and I don't know that there's a one size fits all answer. I'm not, I'm an asset protection lawyer. I'm not really a traditional investment advisor.
Right.
So, I look at it differently. I look at it based on your age. I look at it based on your, your overall wealth. What's your time horizon? Again, when investment advisors try to make predictions about what's going to happen next month or next quarter, they're usually wrong, quite frankly. I was reading that some of the basic exchange traded funds outperform like 70% of all money managers. You just basically buy an index, and the market does what the market does. And so most investment advisors can't outperform their own index on on any kind of short and medium term basis. But as an asset protection lawyer, I'm not really trying to do that. I mean, even now, when people are talking about, oh, Bitcoin's up, oh, Bitcoin's down, I'm not really looking at it that way. I'm looking at it in terms of long-term wealth preservation. And again, you have to think in terms of what's your comfort level. And, your comfort level should include questions like, well, how much can you afford to lose, right? Because if you buy a bad, coin or token, or a bad stock, or a bad, mutual fund, it's going to go down and it could go to zero. So you have to ask yourself that. But asset protection includes the concept of diversification. And so, I have some clients that are super crypto, basically their entire net worth is in crypto. And I'm trying to encourage them that diversification for them means, hey, let's look at, 10% gold. Let's look at, getting some good European stocks, some good US bonds. I'm trying to pull them a little bit away from crypto, but the traditional client's the opposite. So I think it's a fair question. If a client came to me and, they were wealthy and they had a lot of resources, again, I would look at what their main source of wealth is. Let's assume it's, they're big investors and most of their money's in stocks and bonds. Then to me, that client would be looking at, metals, real estate, and maybe crypto. And maybe those areas would each be something like 10%. They're still going to have 70% in, in their main core, investments that have made them money. I'm really not trying to change what they're doing. I'm saying let's think about having a little bit of diversification. I have gold bug clients that have 90% of their net worth in gold because they really hate all things fiat and investment banks and the stock market and whatever. And that group it's pretty tough to get them to really consider something like Bitcoin at all. So maybe if I convince them to put 2 or 3% in a cryptocurrency, that to them is going to be a big stretch. So I'm not trying to take people out of their comfort zone. Usually it's kind of nibbling around the edges to start, but then over time, people, once you own an asset, you tend to follow it a lot closer. And then when you see some of these assets maybe outperforming some of your other assets, then you say, well, geez, maybe I should put more into it. What's really ironic is, I think people understand intellectually that you should buy low and sell high. But because there's a lot of volatility in crypto, as well as metals and other industries, a lot of people, when they come to crypto for the first time, they tend to do the exact opposite. They get caught up in the hype. Crypto's going up. Hey, Bitcoin's at 60,000. I'm going to get involved. And then next thing you know, it's down to 50 or 40 or 30. And they're saying, wow, what did I do? Let me sell and get out of it. And they take a big loss. And again, if you're trying to time the market, don't listen to what I'm saying, because I'm not an investment advisor. I'm not telling you, buy this hot coin because, next month it's going to be worth more. But most of my clients, when they're talking to me, they're talking about generational wealth stewardship. And if I'm trying to build a portfolio for the next 100 years, what needs to be in it? And yeah, probably at this point, if you're not putting 3, 5, 10% in crypto, you're going to be missing out.
Now that's excellent. You talk about the long term, and I know we're running out of time. About a year or so ago, I saw an interview with Buffett. You mentioned Warren Buffett, and he said, "Look, and the same advice you just gave, Joel. Don't sit around every day checking on this stuff." He said, if you invested in the corner gas station, you wouldn't go down every day to see how much gas they sold. He said, don't do that. You're going to drive yourself nuts. And that's essentially what you're saying, right? For asset protection.
I mean, if you get a nice diverse portfolio and you have solid companies and solid bonds and some metals and some crypto and some real estate, you're right. You don't have to really worry about it. I mean, no matter what happens, tomorrow, next week, next month, next year, you're going to be fine.
Good. All right. This has been excellent. I mean, this has been just priceless advice in this cryptocurrency arena, which I think is very exciting and potentially lucrative. So, Joel, thank you. This has been, I know you're over there in Europe. It's late at night over there. So we appreciate your staying up and talking with us at this point. Thank you very, very much. This is excellent.
My pleasure, Carter. Good to be with you.
Thank you. Folks, look, here's where to go. Before you make a decision, nagellaw.com. Get your own personal advice. Okay. I'm just saying it. If you're playing around $1,000 or so, have a ball. But if you're going to be serious, talk to the serious guy, America's #1 asset protection attorney, for your own sake. I urge you to do it. Okay. So, as I tell you every time, let's follow Joel's advice. Let's do this thing. Thanks for joining us.